Telecom giant Bharti Airtel has reported in largely a set of quarter two earnings, which is of course in line. Revenue, however, beat estimates to come at 5.4% higher sequentially at 52,145 crore rupees. In fact, profit and margins were in line with what we were penciling in. Profit rose 12.2% to come in at 6,792 crore, and margins also increased by 41 basis points to 56.7%. Now, Airtel's ARPU, which of course is most important, also increased to come in at 256 in the quarter gone by. Now, for the Africa business, customer base has also interestingly increased approximately 174 million, and revenue in constant currency was up 24.2%. Mansi gets us more.
Taking a look at the scorecard of Bharti Airtel, the revenue were above our estimates, the EBITDA was in line, the margins were as per the expectations, and the profit figures were also in line. Like you rightly pointed, the revenue saw an uptick of around 5.4% on a quarter-on-quarter basis. The profit also did see an upsurge of 14%, right from 5,948 crore to 6,792 crore. EBITDA margin was at 56.7% to be precise, and that's exactly what we were thinking in. So it's absolutely as per expectations. In addition to it, the average revenue per user did see an increase of rupees 256. Capex for the quarter was at 11,362 crore. Again, talking about the Africa business, which is an important parameter to watch out for, customer base did stand at 174 million, and the revenue on a year-on-year basis saw an uptick of around 24%. The margins in constant currency was at 48.8%, which is up around 238 basis points on a year-on-year basis. And the EBIT margin, if you see, was at 32.3%, up around 190 basis points on a year-on-year basis. Lastly, Capex for the quarter was at 1,719 crore, and mobile revenue registered a 13% year-on-year growth, driven by higher realization and an expanding customer base. All in all, good set of numbers as per our expectations.
So clearly the Bharti Airtel quarter two earnings, they're beating estimates, but meanwhile it turned out to be a mixed quarter for Titan. Quarter two PAT rose 35% to 1,006 crore, but missed analyst expectations. Meanwhile, revenue has also overshot street estimates, coming in at 16,534 crore, 25% higher than the same quarter last year. Sneha gets us more.
Well, yes, overall, if you take a look at Titan's quarter two numbers, mixed set coming in, the revenue is a beat versus our estimates, but if you take a look at the net profit and the margin, a miss, and EBITDA is largely in line. So let's take a look at these numbers on a standalone year-on-year basis. Revenue has come in at 16,534, up a healthy 25%. Net profit is up 35%. EBITDA is also up 43%, but we were expecting this jump to be slightly higher. The EBITDA margin has come much lower than our estimates. We were estimating above 11%. This number has come in at just 9.8% compared to 8.6% on a year-on-year basis. Now, from their press release, Titan says that for the jewelry business, the total income for the quarter grew 21% on a year-on-year basis to 14,092 crores. Healthy move from jewelry. Domestic jewelry business is up 18%. Carat Lane has grown 32% to 1,072 crores. So good move over here. International jewelry business has also doubled, and the domestic jewelry margin continues to be between their guided range at around 11%. It's come at 11.1%. So absolutely in line. Other than this, for the watches segment, that's up 13% at 1,477 crores. Analog watches have done well with a 17% growth, and the segment has added 15 stores this quarter. For eye care, the number is up 9% to 220 crores. They've added 5 runway stores. Emerging business has done well, as guided in the quarter 2 update, up 34%. The net loss over here has reduced, albeit very nominally, at 24 crores compared to 29 crores on a year-on-year basis. Fragrances are up 47%. The engineering business is also up 112%. So good move over there. All in all, in terms of the management commentary, they've said that Navratri has done very well, and they're expecting to see more impact from the GST digit too. But well, yes, overall mixed set of numbers coming in from Titan. A beat on revenue, miss on PAT and margins, and inline EBITDA.
There you go. While it was a mixed quarter as far as Titan is concerned, let's move over to Tata Consumer. That has, of course, reported strong earnings for the second quarter. Revenue for the quarter rose nearly 18% to 4,966 crore, while PAT also came in at 11% higher at 404 crore. EBITDA, let's talk about EBITDA now, which also rose 7.3% to come in at 672 crore, but the margin has declined by 133 basis points to 13%. 5.5%. Of course, we continue to get you all the quarter two earnings as well as far as these top companies are concerned. But meanwhile, some good news as far as auto sales are concerned. The October sales, as far as the auto industry is concerned, were in absolute top gear. The latest monthly sales, the data shows that most companies have reported higher than expected sales amid the GST rate rationalization and also, of course, the festive demand. Srishti gets us more.
Well, yes, majority of the companies have reported a very strong set in a month gone by. Majority did beat the street estimates as well. And then, of course, October month marks the first full month of the GST rate rationalization benefits kicking in. And it was also the festive cheer that was all around marked by the auspicious days as well. But majority of the companies have done way better than what the street was penciling in. And firstly, let's start with the passenger vehicle space. Here in Tata Motors managed to surprise us with almost a 27% growth is what the company has reported on a YY basis. It's not just the wholesales data, but in respect to the Vahan data as well, the company manages to hold its second spot, surpassing the likes of M&M as well as Hyundai, and definitely a very strong set from Tata Motors PV division. Other than that, even M&M numbers were better than what we were penciling it at 1.2 lakhs for the automotive division. That too has registered a jump of 24% on a YY basis. While for Maruti as well as Hyundai, the company did report almost an inline set. When it comes to the commercial vehicle side, herein we were not building much of an expectation, but look at the number. It's almost a double-digit growth that most of the companies have reported, and the most growth was reported by Ashok Leyland with the 16% jump. When it comes to the two-wheeler pack, TVS Motors did report a very strong set, almost an 11% jump on a YY basis. But other than that, when it comes to Eicher Motors, Royal Enfield numbers, in line to what the street was penciling in. But tractor was definitely the showstopper, because despite the expectations of a decline on a YY basis, given the kind of timing mismatch in the festive sales from last year to this year, this time around the companies did report a positive numbers. And not just that, the management commentary going ahead continues to remain on the positive side. So all across the board, we can see the festive cheer kicking in. Back to you.
In fact, let's continue to focus on the auto industry a bit more. Maruti Suzuki chairman R.C. Bhargava expects 10% growth as far as the small car segment is concerned in the second half of the year. Listen into what he had to say about the market share.
Second half, we will have a 10% growth. I'm sticking to that. In the small car segment, 10% growth in the second half of this year. Simple reason for market share growth is that our small cars will, as I'm hoping, will grow at 10% a year. The bigger cars are not growing at 10% a year. And there's only one other company in India which makes a sizable amount of small cars. They will also benefit and they will also grow faster. But the result is that the small car growth will drive faster market share growth for these two companies. And correspondingly, there will be some loss of market share for the other companies.
All right, we continue to get you all the details as far as the auto industry is concerned. The consumers are benefiting a lot more, but the consumers will continue to benefit even as far as ordering groceries is concerned, especially online. It will now become cheaper as Zepto has now eliminated all the handling as well as the surge fee. This has happened post a massive funding round. Now, sources have told ET Now that the quick commerce company wanted to address the dark patterns problem decisively. Also, the cash burn has been consistently reducing, and therefore Zepto wanted to pass on the benefits to the customer as well. Anjali gets us more details about this particular move by Zepto and also the sort of benefits that the consumers will get.
Right, so the quick commerce platform Zepto has unveiled a new campaign calling it the all-new Zepto experience, under which a lot of the additional charges such as the handling charge, the rain surcharge, as well as the small cart fee have now been done away with. So you will now get free delivery on all orders above 99 rupees. Now, some sources in the company tell ET Now that this is being done because the earlier charges led to confusion and it gave the impression of certain dark patterns being used on the platform. platform. We saw multiple social media users as well, call this out on the platform, and therefore Zepto's sources now say that they wanted to address this problem decisively, and they've also said that the earlier structure wasn't serving the purpose they had set out for, and that this this convenience or this reduction in charges for customers is coming by way of the cash burn, which has been consistently coming down every quarter, and that the move is a part of a broader effort to simplify the cost structure for the customers and improve transparency. Now, they're calling it the all-new Zepto experience, and if we compare it to other quick commerce platforms, then, they still have a small card fee, and a free delivery is only applicable over 199 rupees, and they're also levying handling fees ranging from 4 rupees to about 9.8 rupees. So that's the new update coming in from Zepto. Your grocery orders on Zepto are going to get cheaper. It would be interesting to see how much time they can really hold on to these offers that they've rolled out right now.
All right, with that, let's get you some updates from the world of technology, starting off with Microsoft now, which has inked a deal with data center operator Iren worth $9.7 billion for access to Nvidia's advanced chips. Now, this is a 5-year contract under which Microsoft can secure Nvidia's GB300 chips. Now, this move by Microsoft basically is aimed at expanding its AI services infrastructure. Microsoft also with this gains approval to send its Nvidia chips to the UAE for the first time ever. Now, additionally, Iren also has signed a $5.8 billion contract with Dell Technologies to purchase Nvidia's new graphic processing units, which are, of course, GPUs. And while on one hand, you're seeing these big moves being made by Microsoft in terms of AI, there's more news along the AI front. OpenAI has also inked a $38 billion multi-year agreement with Amazon Web Services. With this deal, OpenAI will now immediately start running workloads on AWS infrastructure and tapping into Nvidia's graphic processing units. OpenAI, in fact, can now also train new AI models using Amazon's data centers and use them to process ChatGPT queries. So, lots of movements there as far as the world of technology is concerned. In fact, lots lined up on Business at 9. But before that, time for a short break. We'll be right back.
Let the thrill begin.
The all-new Hyundai Venue. Bookings open.
Advanced discussions with Shriram Finance to acquire 20% equity stake in the Indian NBFC. In fact, Anurag Joshi gets us more details on it. Take a look.
Japanese financial giant Mitsubishi UFG Financial Group is in advanced talks to acquire a 20% equity stake in Indian shadow lender Shriram Finance. Shriram Finance is a non-banking financial company, and if we go by the market prices, the value of this 20% equity stake would be equal to about 30,000 crores. That gives an overall valuation of 1.5 trillion rupees to Shriram Finance. And if the deal succeeds, MUFG could secure more than one board seat in Shriram Finance. The potential deal comes amid a surge in acquisitions in India's financial sector. Emirates NBD, UAE's leading lender, bought a majority equity stake in RBL Bank. SMBC has bought an about 25% equity stake in Yes Bank, and Blackstone is acquiring an about 10% equity stake in Federal Bank. So there's a lot of acquisitions which are happening currently in the BFSI space. And if you look at the financials of Shriram Finance, it manages over 3 trillion rupees of assets. Its net worth is about 61,000 crore, and its profit after tax was 2,300 crores as of September 30 quarter.
Moving on now, the much-awaited another round of stake sale of LIC by the government is likely to get delayed as sources now are telling 80 now that Deepam would wait for the stock price to stabilize near or above the IPO price. In fact, Prakash gets us more details. Take a look.
Well, that's an important development coming in as we are learning from our sources that LIC's stakes are likely to be slightly delayed due to prevailing market conditions. as we are given to understand that the government may refrain from initiating the stake sale exercise until the stock price improves. A very significant development coming in. In fact, the DIPAM is expected to wait until LIC's stock price reaches at least the IPO level, which is impacted by various reasons at this point of time. And therefore, DIPAM wants the stock price to stabilize around IPO price band, while the current price remains below that level. And therefore, government is taking all these factors into account before moving ahead. And sources suggest that the stake sale in LIC likely by January 2026 after taking all these factors into account. However, roadshows are expected to begin this month where government is planning to sell a 2 to 2.5% stake through an OFS. You are aware that the government had sold a 3.5% stake in LIC to an IPO in May 2022, which requires to sell another 6.5% stake in the company by May 2027 to meet SEBI norms. And therefore, government intends to sell the remaining 6.5% stake in the company in tranches within the deadline.
And the Vodafone Idea shares rally in tweet. The telecom major has approached the Supreme Court seeking further clarity on AGR dues in its fresh plea. Samir Dikshit filed this report earlier. Take a look.
A major relief to telecom player Vodafone Idea. Vodafone Idea once again approached the Supreme Court citing an error in the last judgment of the Supreme Court. There was a paragraph which lacked some sort of clarity, based on which Vodafone Idea approached the Supreme Court, and now the Supreme Court has considered the plea and has allowed that this particular paragraph should provide more clarity. So basically, the paragraph which was raised by Vodafone Idea mentioned that the central government can reassess the additional AGR dues, but not detailed or the entire AGR dues, based on which Vodafone Idea approached the Supreme Court. Now, after the Supreme Court allowing the revision, it simply means that the entire reassessment can be done not just for the additional AGR dues, but also for the entire AGR dues. Now, let me tell you that Vodafone Idea initially approached the Supreme Court citing to quash the additional AGR dues of rupees approx 9,500 crore that was raised by Department of Telecom, whereas the total AGR dues on Vodafone Idea is of roughly around rupees 84,000 crore. But in the last Supreme Court judgment, it mentioned that the plea has been quashed, though the central government can do the reassessment of the additional AGR dues. So this provided some sort of restriction or the border, based on which Vodafone Idea approached the Supreme Court, and now Supreme Court has clearly mentioned that the central government can take a call on the reassessment of not just the additional AGR dues, but on the overall AGR dues. So this indicates that in the coming days, not just Vodafone Idea, but the entire telecom sector can expect some sort of relief that may come in from the telecom ministry.
So that was my colleague Samir Dikshit getting us details about Voda Idea. Now let's also listen into what Mahesh Agarwal of Agarwal Law Associates and also a lawyer for Voda Idea had to say on this recent development.
The original AGR dues as determined by the Supreme Court was 58,000. 58,000 included a principal amount of some 17,000 and interest and penalty on interest and penalty. So if the correction is allowed or permitted, then the 17,000 needs to be corrected. Once the 17,000 needs is corrected, we are hoping it is corrected, then all subsequent numbers will go down. So what will be the real impact? It is difficult to determine now. But if it's a proper reconciliation done, then the amount should go down. Worst case scenario is already there. The demand is staring at our face, which is not a correct demand. So that will stay if nothing happens. And if because of the Supreme Court order which removes the impediment of the government to reconsider, reconsideration takes place, then the amount would go down.
Let's now shift our focus down south, where a two-member bench of Madras High Court passed an interim order against Brigade Enterprises. The real estate major has been asked to cease the construction of its Morgan Heights project in Chennai owing to allegations of approval irregularities. My colleague Jude Sanet is here with more.
A two-member bench of the Madras High Court, which included Chief Justice Manindra Mohan Srivastava has passed interim orders restraining Brigade Enterprises from continuing construction work of its Morgan Heights project in Chennai, which it is allegedly constructing or operating very close to a Ramsar water body. Now let's break this down for you. Trouble for Brigade first arose a few days ago when an environmentalist organization called Arapur Iyakam made allegations that the Tamil Nadu government had colluded between departments to illegally hand out approvals for this project in question. Remember, the project itself is a joint development between Brigade Enterprises and the owner of the land parcel in question. Trouble continued for the Brigade Enterprises when the AIADMK's legal wing went about filing a PIL in the Madras High Court pointing to irregularities in Brigade's alleged approval process with regard to the construction of the project in question. Now let's break down what the issue really is. Construction on a Ramsar site simply means construction in an area that is a water body widely acknowledged to be one that has ecological sensitivity, which means developers must restrain or hold back from conducting a construction activity on the water body in question. So this water body in Chennai's locality of Sholinganallur has been flagged as being one where Brigade had allegedly secured approvals illegally from the Tamil Nadu government in order to go about constructing on it. The PIL, of course, has been filed, and the interim orders now means that no construction activity can happen at this project in question at least until the 12th of November, after which the court is expected to resume hearing.
Speaking of legal hurdles, there's some more of it as far as industrialist Anil Ambani is concerned. The Enforcement Directorate has now attached assets worth more than 3,000 crore rupees linked to the Reliance Group chairman as part of a money laundering investigation against his group companies. Times Network's Bautosh filed a report earlier. Take a look.
In a big setback to Anil Ambani and his group of companies, the Enforcement Directorate on 31st October provisionally attached assets of Anil Ambani worth at least 3,000 crore rupees. The Enforcement Directorate said that attached assets include Anil Ambani's Pali House residence and also his office space in Delhi as well as in Telangana, in Mumbai and also in Noida. In August, the Enforcement Directorate carried out raids and searches at 52 locations in 5 states. The Enforcement Directorate's money laundering case is based on the Yes Bank bank fraud case. The Enforcement Directorate has said that between 2017 and 19, Yes Bank had given loans to 2 entities linked to Anil Ambani. These entities are Reliance Home Finance Limited as well as Reliance Commercial Finance Limited. The total amount that was given by Yes Bank was around 5,000 crore rupees. In 2019, the bank fraud, or at least NPA, turned around 2,600 crore rupees. ED's investigation revealed that at least some part of that amount went back to the sister companies or companies that are linked to Anil Ambani group of companies. ED has said their investigation revealed that 12,000 crore rupees was rerouted back to Anil Ambani group of companies. So far, Anil Ambani or his group of companies has officially not issued any statement, though earlier Anil Ambani had said that he has resigned from the board of directors of this company way back in 2008 and 9. Sources within ED has said that more provisional attachment is accepted soon.
With that, it's a wrap on this edition of Business at 9. Thanks for watching.
Let the thrill begin.
The all-new Hyundai Venue. Bookings open.